Morning, everyone. Sandeep Singh from Western Copper and Gold. Good to be with you today. Thanks to the organizers for inviting us. I believe I can get going. Yes, perfect. So please be mindful. I will be making forward-looking statements as I talk to you about the Casino Copper Gold project in Canada. It's in the Yukon, so northern Canada. It's a world-class, globally significant resource in the copper and gold space. It is significantly advanced. We just submitted our environmental assessment a couple of Mondays ago, so we're going through the permitting phase, have a full feasibility study on the project, which is current. So the numbers we're going to talk to you about are robust. It's been endorsed by some of the smartest companies in the space. We have Rio Tinto and Mitsubishi Materials on our shareholder roster. So quite a lot of work that's gone into the project to date. And we're going through the various phases of de-risking the project as we move forward. We're listed in New York and on the Toronto Stock Exchange under the ticker symbol, WRN. We're well followed. We've got we have seven groups covering us on the research side. That's doubled in the last year and a bit. So the following has grown significantly, as has the trading liquidity. I've been with the company about a year and a half now, took over as CEO. We were trading a couple 100,000 shares when I started. We're now trading regularly a couple million, mostly on the NYSE. And we're well funded. We had 61 million Canadian, that's roughly US $45 million at the end of June. That will cover us for the foreseeable future to unlock hopefully a significant amount of value from. And as I mentioned, a couple of strategics on the shareholder roster at 10 and 5%, but also some other very high quality names currently owning the company. Just to finish up on Rio Tinto and Mitsubishi, so I'm sure you're familiar with both. Rio Tinto has invested in the company 5 separate times. Mitsubishi, as far as we know, we are the only time in their long history they've ever invested in the equity of a mining company. Both have been tremendously supportive. Both are on our technical committee, technical and sustainability committee, so they lend us or give us, frankly, a ton of technical support, the likes of which we as a junior company could not replicate on our own and would not want to pay for. So both have been very helpful to the cause. In terms of the project, I mentioned the Casino Copper Gold project. It is 11 billion pounds of copper and 21 million ounces of gold. Individually, those numbers are quite large. Together, they are, as I said earlier, world-class. Well drilled. So when we say the M&I category, the measured and indicated category, that just means there's a lot of drilling that goes to underpin those resources. We've gone even further and we've delineated a 27-year phase one, I would underscore phase one, mine life in reserve, which is the highest confidence level for resources. And that's only based on 1/3 of our current resource. So 27 years in phase one is 1/3 of the resource. We definitely think that remaining 2/3 will matter, and there's more to find on the project. Importantly, this pie chart and everything in this document that you might see is done at $3.60 copper and $1,700 gold. That was the price deck we used 3 years ago in our feasibility study. If you did this pie chart again today, by value, the project is about half gold, half base metals, and I personally love that mix. Right now we're benefiting from the gold half, but at some point we certainly will benefit, I believe, from another lift in the copper side of things. So having two big revenue streams that aren't correlated to each other, don't move at the same times in the same ways, but both have very good outlooks, is excellent from our perspective. The project, I think the couple things I'd point out on this slide that really make the project work or that are important, first is the scale. So as I said, 27 years in phase one, only based on 1/3 of our current resources, that matters. And that reserve I mentioned earlier is in the bottom left, 1.2 billion tons of 0.4 copper equivalent. The other two things that make this project as economic as it is the extremely low strip ratio, a strip ratio of 0.43 life of mine. So what that means is for every ton of rock that we care about, we have to move 0.4 tons of rock, which is waste. And in a large earth-moving operation like ours, that's a massive advantage. I'll show it to you graphically later. And the second is that core zone. So you see the hotter colors sticking out of the ground, means the best part of our deposit is sticking out of the ground where we start mining, and that leads to an incredibly de-risked and quick payback. In the first years during payback, we're mining 50% better grade, and there's almost no strip, such that even for, there's a significant capital investment for this large multi-decade mine. It gets paid back in about 2 years at current commodity prices, even less. If we're wrong, it's not 2 years, it becomes 3 years. But still, in the grand scheme of things, in terms of the mine life of this project, that's immaterial. So that combination of really quick de-risked payback, long life in phase one, multiple decades of potential beyond that, in a safe jurisdiction, low elevation, clean metallurgy, those are some of the reasons we like this project as much as we do. We'll jump ahead. This is just really that graphic I promised earlier. We show our metrics from a grade and a strip perspective compared to pretty much the whole universe of other junior companies and some projects in the hands of major companies. And we show our metrics both during life of mine and during the payback period. And what you can see is, life of mine grade, middle of the pack. But the strip ratio is tremendous, best in the world. And when you look at the strip adjusted grade, so you essentially look at those two things together, our project is akin to Reko Diq, which Barrick is building in Pakistan at the moment. So really, really neat combination of those two aspects. And this is the output of that feasibility study. So I would remind you, this was done in mid-2022, relatively current. It was probably done at peak inflation during COVID, where nobody knew what anything was going to cost, and consultants had a tendency to pad numbers. It is a feasibility study as well, so a level of detail that is quite significant. You can get away with things perhaps in a PEA or a pre-feasibility study that you can't necessarily in a fees. And it was done with Rio Tinto on our shareholder roster for a year on our technical committee, providing us an incredible amount of guidance. So that's just a bit of context. At the time when we used 360 copper and $1,700 gold, the NPV of the project was 2.3 billion Canadian. The IRR and the payback were still very good. If you look at consensus pricing, so what our broker is saying the long term would be, that takes you to a $4 to $5 billion NPV project. And frankly, that consensus keeps drifting higher. The longer gold prices stay elevated, the more that long-term consensus keeps moving to the bottom of this page. And personally, I believe that we are trending to the bottom right. I don't think new mines are being built in the copper space for less than $5 copper. So if you start to use those types of numbers, you're looking at a $6, $7, $8 billion NPV project. Today, we have a market cap of 450 million US. So trading at a fraction of what the underlying value of the project is. That's the opportunity for investors today. We're well funded, as I said, and how we intend to create value is by de-risking through the permitting phase. And as we do, there are precedents. There was a transaction done in the copper space just yesterday, or maybe it was 2 days ago. Forgive me, my time zones might be a bit off, where we've seen good copper development projects, copper gold development projects trade at 0.7 times NAV. They're perhaps a couple of years ahead of where we are in terms of de-risking. But as we do that work, we can go get 0.5, 0.6, 0.7 times, these numbers. And that is a multiple of where we're trading now. So that's the opportunity for investors without fearing too much dilution. Because as I said, we're either funded or we're mostly funded to do all of that work in the go forward period. The last thing I would say is probably the first time in my career in Canada where the federal government is supportive of mining. It hasn't always been the case. I think there's a realization that we in Canada need to get back to being a resource country, which is what we are, much like Australia is. So a lot of push to move these projects forward, and we are the largest critical minerals project in Canada, getting a lot of attention and moving forward at a quick pace. So that ding was for me, and I'll pause there and look forward to hopefully speaking to some, if not all of you, over the course of the next 2 days. So thank you for your time.